Can I ask each of you to maybe describe a bit more about the size of rounds you normally see and the kinds of companies that you're looking at in most cases? Can I start on this side of the table? When you look at Zeno, what kind of deals are normally brought before Zeno, and what investment sizes are made?
Well, I think if I speak for both OneAccord and Zeno Blit, it's the communal investment that we're looking at, where there's a group of people considering this. And I see, if I sat at a Keiretsu meeting this week and listened to the people around me, and without an exception, they were there to make investments, not to hit a home run by a company going public in the next few months, but to invest in a company they felt that would grow and be a profitable company.
Are these $1 million investments? Or these $200,000?
These end up being from a few $100,000 to the low 1.2, 1.4 kind of millions. Okay. As Rebecca said, we're not, I didn't see anybody or listen to anybody or see us looking at multiple millions. But it was about the business that they were looking at and about their ability to feel connected with that business.
Mm-hmm. Okay. What's the size of deal you normally do, Rebecca, and what industries?
Seeking funding from the Alliance of Angels are typically looking for between $250,000 all the way up to $2 million, although I would say that our sweet spot is probably in the $500,000 to $750K range. We haven't, over the past couple of years, necessarily fully subscribed these rounds, and to that end, we're raising a seed fund to co-invest alongside of our own angels leadership. So we're trying to help fill the funding gap. But I think that companies who are seeking funding may expect to have to make the rounds to several organizations in town, either here or along the West Coast. In terms of the kinds of companies we invest in, to Todd's point, angel investors have to be pretty patient. They're not necessarily looking for VC-style returns. They don't have LPs and internal hurdle rates that they have to satisfy, but they have to go home and explain it to their spouse. They have to kind of live with themselves. But I would say in our history, we have, I think now, 17 acquisitions, 4 IPOs. We've had 5 exits this year, and they really do kind of span the spectrum there. 3 of them are what we would call kind of nice little angel deals. We were invested for 3 to 3.5 years, and our investors probably got anywhere between 2 and 4 times their money back. They tend to look at multiples of cash in versus some kind of IRR, like a venture capitalist might. And then we had 2 that we were in for longer, 7 and 10 years respectively. Snap-in was acquired for $180 million, and In Situ was acquired for $400 million. Not a typical angel exit or return. That's not necessarily our expectation. But again, I think one of the nice things about angel investing is that we're not looking to get out within the next 12 to 18 months. That's kind of the rare occasion. Perhaps one of the bright spots is in these workshops that I do every month, I usually explain to entrepreneurs that angels are typically not terribly risk-averse group, and angel investing is the highest risk element of their portfolio. Not really sure that's the case anymore, so maybe that's good news for angel investing. This is a more interesting asset class, as Todd was explaining.
So I'm going to get to you in a second, Geoff. I just want to make sure people understand the range of where you invest. I heard 250 to $1 million is generally the area. Yeah. Is that the same with you, Todd? Or